Welcome back. Check out chip stocks this morning. Higher across the board, rebounding after Friday's sharp losses. Micron is up 5.5%. Intel's up 5.33%. SanDisk up almost 7%. They've been soaring over the last year. In fact, SanDisk is up better than 3,000% in a year. We've got major technology earnings out this week. Alphabet, Tesla, IBM, Intel, Verizon, all on deck. We know what IBM is going to tell us because they already pre-announced, causing the worst day ever for the stock last week when IBM shares plummeted 25% after pre-announcing an earnings miss. Joining me now is the Bear Traps Report founder, Larry McDonald. Larry, great to have you. Thank you so much for being here.
Hi, Maria.
And I want to get your take.
Special thanks to you and the team.
Yes, and I want to get your take on this rotation underway on Wall Street. You say we're in an AI malinvestment cycle, where investors who poured capital into this frenzy can still be financially destroyed. What do you mean? Tell us about that.
Well, I mean, this is thanks to you and your team. You and I spoke about this 4 or 5 months ago. Kimi, intellectual property theft from China, and now, this morning, I mean, this is really breaking news. The Treasury of the United States on your show is talking about reconstructed code, watermarks. This is exactly what we were speaking about 4 months ago. And now you have Microsoft equity unchanged since February 2024. Meta equity unchanged since July 2025. Oracle unchanged since June 2023. So the bottom line is the pressure, and what we're hearing at our dinners with our institutional investors this week and last week, the pressure on CFOs and CEOs in the tech space to tone down the CapEx just a little. That is really what's in play. And if they do that, stocks like Oracle down 65% off the highs could be up 20, 30% on just a little bit of reduction in this insane capital destruction path that they're on.
Well, it's true. There's been an enormous amount of money, and some of it is borrowed money. But Tom Lee from Fundstrat this morning says, we believe the AI semi-DRAM sell-off is nearing an end. Do you see that sell-off extending?
Well, see, this is what I'm talking about. If they do take down the CapEx pathway, the semis are going to get hurt even more. So there is, if you look at Zuckerberg's statements in recent days, he's alluded to selling code, selling compute. And so that's given the Mag 7 a little bit of a rally here. But the semis are the beginning of a pretty long bear market. So we would sell the rallies in the semiconductors, absolutely.
Well, I mean, Mike Lee, jump in here because I know you've been looking at semiconductors, but what Larry just said is true. Secretary Bessent just said to us on television live, we are finding U.S. watermarks on Chinese models. The secretary just said that, Mike.
Yeah, look, I think what's going on with open source versus closed source models is it's a narrative that's going to play out, but I think it's far from derailing this. This is going to be the largest investment cycle in the history of the country. And just like I think Larry's smart. I love his work. I'm just on the polar opposite of this trade. I think this goes on for years. I think the world of technology is changing. And if you understand the exponential growth of token demand, the semis, I 100% agree that we're going to get a slight pullback in CapEx spend from the Mag 7. I would be a seller of the Mag 7 and buyer of the chips. Because whether you're using closed source or open source, you need compute. We do not have the land, the energy, the chips, the resources to be able to build out and meet this demand to the point where you're going to get overexpansion. So I agree with a lot of your theses, but I think this is the wave of the future, and then we are off to the races.
Larry, how's that strategy?
Well, it's very sound, but every Tom, Dick, and Harry thinks that way, right? Like every single sell-side analyst on the street thinks that way, and there's all buys on every single semi stock. That's why they're so expensive. What the Treasury Secretary said, and he actually said on your show, I want to give investors clues, right? Energy, your risk reward in owning the FCG ETF or equities in the energy transfer area, like energy transfer and companies that move energy around, your risk reward versus the semis is 10 times better, right? Because you're getting into an area that is far cheaper, far less Tom, Dick, and Harry's and every single analyst falling all over themselves the last 7 to 12 months to buy these stocks, more like 24 months. So you really want to go where the money is going to be, like Treasury Secretary, go where the puck's going to be, not where it's been.
Mark Tepper, reaction.
Well, I mean, here's something that every Tom, Dick, and Harry's not talking about, which is the fact that there are several companies right now, given the fact that AI has become so expensive. I mean, I can tell you, we use Anthropic's Claude.
Yeah.
And I feel like we're barely even scraping the surface, yet they want to charge us more and charge us more. It's getting to the point where some companies are saying, you know what, I would rather actually not use AI and hire an employee back.
And real quick, Larry, in terms of allocating your capital, do you still want to stay with hard assets? Are you looking at gold? Are you looking at commodities and mining companies?
Right. Special thanks to Kim Githler. We're at the Money Show giving the keynote speech today in Vegas, and that's the whole point of the conversation. Hard assets. Agnico Eagle Gold Mines, 6 to 7% free cash flow yield. Stocks down. Companies buying back $2 billion worth of stock. Your risk reward in the gold miners here and hard assets with $1.1 trillion of interest costs at Treasury. The Fed really can't hike that much.
Yeah.
So at the end of the day, this cycle, it's the Fed's ability to hike rates is much lower than it has been before. Therefore, gold miners, that's the place to be. That's your best risk reward in the market right now.